gotta just record this computer.
Okay, fair enough. We'll do that. All right, cool. So, let's see what happened here. Share screen. Okay, so everybody can see my trading account here, this trading screen.
Yep.
Yep.
All right, cool. Let's see here. Show. All right. So, options. So everybody here, for the most part, is familiar with either trading of some point. Cole, you said you traded some futures. Nicholas and Ryan, I know you guys have been trading stocks a little bit. Jeff, I know you definitely trade stocks. So options are, in a nutshell, you trade options the same way you trade stocks. You buy and you sell a price for a profit, and the one contract of an option is the equivalent of owning 100 shares of the underlying stock. Okay, so let's do the best way I think to always go about it is just to have an example here. So if I wanted to own Apple at 100 shares at $137, quick math here, Ryan, you're the one in college right now. How much is that going to cost me to own 100 shares of Apple?
Wait, 100 shares at what?
Carry the one?
Wait, 100 shares at 27?
I can't hear you. You muted?
Did you say? No, I'm not muted.
No,
Did you
you're
say
not.
Ryan? $27?
Excuse me?
Did you say 100 shares at $27?
No, the stock price right here is $137 per share.
Okay, so 13,000.
13,000. So roughly $14,000, right? To buy into this stock to make some sort of move. Okay. So let's say I'm looking at the chart here. Okay. This is a daily chart. Each candlestick here, for all of you who are not familiar with it, I use candlestick charting. We can go over that later for people who aren't familiar with it. But basically, the recent high about a couple weeks ago was 145, based off of some analysis that I'm doing here and some levels that I think it's breaking through. I'm looking for a move in the upward direction here. At the very least 140, maybe even testing 145, let's say, in the next couple weeks. Okay. So if I wanted to do that and reap the benefits of it, I would spend about $14,000 to own 100 shares. And let's say it moved to $140 or 100, let's just do a nice round number of a $5 move to 142 and change. Okay. 142 and change is a $5 move times $100 or 100 shares is what?
$500.
Okay. Right. So I paid $14,000 to make $500 on this move. Correct?
Yep.
Putting down a lot of money to make not a lot of money there. Okay. Now, if I were to, let's say, within the next 3 weeks, by the third week in February, I thought this stock was going to go to 142. Okay. I would look at a strike price. Okay. So every option has a strike price. Okay. And every option has an expiration. This is called an options chain here. There's an option chain for this week. There's an option chain for next week, third week, fourth week of February, and so forth. And then about 5 to 6 weeks out, it stops going weekly and goes to monthly. Every monthly contract expires on the third Friday of every month. Okay, and it goes all the way out to March, the third Friday of March in 2023. So, everybody with me so far? It's a little overwhelming, but we'll get down to it. So, let's say we want to use the monthly contract of February, which is the third Friday of February, and we want a strike price, which is our target, of 142. Okay. The premium on that is $1.55 here. Now, this number, this premium represents 1 share, okay? Every option is worth 100 shares. One contract is worth 100 shares, okay? So to purchase this, I would times it by 100. So for $100, for $155, I would have the rights to 100 shares. Okay? Everybody with me so far? Now, if this stock goes up to $141, oh, hold on one second here. I need to just fix this for a second. All right, this has it set up for purchasing 10 contracts right now. I don't know why I don't know why it's doing that. Okay, so these numbers here are going to be divided by 10 because I can't figure out why it's doing that.
Great seminar.
Yeah, I know. Total failure so far. I didn't do this the other night.
Nah, it's all good.
Hey, anything helps.
Okay, here it is. There we go. Put that out of the way here. Okay. Okay, one contract. Okay, we bought one contract, which is 100 shares at $1.55 a share, is a total price of $155. Now, if this stock moves within the next so many days to the price of $141, the premium will now be worth $5.55 times 100 is a profit of, or excuse me, it'd be $400 because the profit would be $550 right here. Okay, this is on a move from 137.39, which is the current price. A $4 or so move, okay, is now profited me $550 on a $155 investment. Do the math, that's roughly a 200% gain. Okay, so this premium will continue to rise basically as our strike price moves closer to the actual value. So as 137 goes up to 40, these premiums, as you can see, closer to the strike price of 137, premiums more expensive, $3.45. Okay, as we move away from the current price of the stock, the premium goes down. Okay, everybody with me so far? Now, what causes the price of an option? There's a couple things. A, the underlying cost or the underlying price of the stock. 2, time decay. Okay, so our biggest issue with options is our time frame. You can go ahead and purchase a stock for 100 shares and you can wait on it forever, right? You can ride the wave up and down, let it go, and when it gets to a certain price point, you can sell it. We're basically making a bet within a certain time frame that this stock is going to move in a certain direction in a certain amount, and I'm going to reap the benefits of it. Okay, so for instance, this is a weekly contract, meaning it expires this Friday. Okay, so if I were to do the same thing, the same strike price, and hope for a move from 137 to 142, look at the premium here. It's only 6 cents a share. I can get 100 shares for $60. Excuse me, $6. Okay, that's pretty much meaning tomorrow this stock needs to move $5. If it doesn't, I lose this. This will go to zero, and I lose basically all the money that I've put down on it. Okay, so that's your risk with options. What you invest can go to zero, but only what you invest. Okay, so you're not on the the hook for, let's say, $14,000 for 100 shares. Okay, so let's do an example of something that just kind of happened today for me this week. I was trading a stock, FAS, which is a triple leveraged stock for banks. Okay, so I was kind of following a chart pattern here, found this this kind of trend line working in this direction that had a nice breakout over some moving averages. And this was on Tuesday that I saw this candle that kind of broke through everything and closed above these levels. So I really liked it here. So I went and I bought a $70 strike price for next week. Okay, so I'm basically betting that this will go to 70 by next week. Now, if this stock closes at $69 next week, I'll lose that whole investment. Okay, so there is some gamble there. But I looked at the premium for it. A $70 premium was 50 cents a share. So I bought 3 contracts. I bought 300 shares times 50 cents was $150 investment. Okay, and I had 300 shares worth. Next day, the stock kind of moved up a little bit. The premium didn't really move all that much. Okay, it went up a little bit, but we got one day closer to expiration. So it kind of like, negated itself out, if that makes sense to everybody. The time decay on that was equal to the slow move upward. Now today, we had a huge gap up, right? Really nice move closer to 70. I could hit 70, tomorrow. And, at that point, once you get over your strike price, your premium moves dollar for dollar with the stock price. Okay, up until then, it moves kind of at like a fraction of it, anywhere from like 50 to 60 cents a dollar. That's called your delta, that rate of change, and that's listed on every option here. I can change it to, they're called the Greeks. For instance, $136 on Apple. The delta is 50 cents. Okay, so for every dollar the stock moves, your premium will move up 50 cents. Does that make sense for everyone?
Yep.
Okay, so back to this chart. So it moved. I like the move. I looked at the premium today. The premium was worth $1.80 per contract. So I
Oh,
sold 2 of them. Okay, so $1.80 times 100 was $180. I bought it for $50 for each contract. It was worth $180. And I sold 2 of them. So I made a profit of basically, so I sold it for $360. I paid $150 for it. Do the quick math. It's $150. It's basically like $200 profit. Plus, I still have the third one.
you're
Okay.
doing this for a living.
Yeah. Small. This was super small. Like I found that was super cheap. If I wanted to, I can go ahead and purchase like 10 contracts, and you're making good money. But the important thing here is really the percentage change. Okay, 50 cents to $1.80 is basically over 300%. If I bought this stock, 300 shares at $63, I'm putting in how much money here? I'm putting in $18,000 to make a $4 or $5 move is nothing. So your upfront investment is so much more, it's so much smaller for just basically an exponential return on your investment. So I'm going to hold this, and I'm going to hope that tomorrow we gap up. And even if we don't, I know I got time. I basically have like Monday or Tuesday of next week to get to this like 70 point. And that point, I'll make a decision that, okay, now I have to really consider my time decay. If I'm not getting closer to 70, I got to see where the value of that premium is now. So if this stock stayed sideways here until next Friday, that premium will continue to just bleed down. Okay, it'll just slowly go from 180 to 160 to 1 to 0.9, et cetera. And at some point, I'm gonna have to cut my losses if I don't think, it's running out of momentum. I'm looking at the volume, I'm looking at the chart, I'm looking at what I like. So yeah, that's one trade in a nutshell there. We can go over another trade.
Hey, Mike,
Yeah.
so what you do is when you say you sold your contract to somebody else, did you say you put?
Yes.
So
So
you
to
can
go
put it
back
up-
to the grid, I'll show you the grid here so we can look at the actual premiums. So you buy and sell premiums. These
Yeah.
these prices here.
you-
FAS.
when you want to sell it, you have to wait. It's dependent on somebody.
Yeah, so every seller needs a buyer, right? So
Yeah.
somebody's buying that premium there for me.
So somebody won't pick it up.
There
There could be a chance.
in
Right?
theory, yes. Okay, so that brings me to another good point here. Looking at volume and open interest on premiums, okay? If you noticed on here, these premium spreads, the ask, just like a stock, you got an ask price and you have a bid price for buying and selling stocks. Let's go to the exact contract that I have for next week, the 70. Okay, so actually a wider spread than most. Ideally, you really like to see a 2 to 3 cent spread between your ask and your bid, just like on a stock. And a very liquid stock for like Apple. Let's do Apple just for a quick example here. At a strike price in and around the money where it's at right now, $1.37 or $137. There's a 3 cent difference. I don't want to buy a premium and then have my bid be 30 cents lower. And if I'm buying 2 or 3 contracts, I'm basically losing $100 right off the bat. So that's something you want to pay attention to. Generally speaking, an option with higher volume and a higher open interest will always narrow the gap in spreads between your ask and bid.
You have more buyers.
Yeah, more buyers, exactly. Less risky, more liquid, able to move it. I've personally never been in a situation where I haven't been able to sell. I'm usually trading anywhere from high, very popular stocks to even some less popular stocks, whether it be SPACs or so penny stocks, SPACs, most of these stocks don't have an options chain. They really need to kind of be
So my question is, who's going to be who picks these up when you're like, I'm screwed? Like you said, it's going sideways. Obviously the premium's getting lower and lower. So it gets to a point where you're like, I got to cut my losses.
Yeah, so definitely. So there's pretty much 2 situations you're forced with when purchasing an option. You're like, I'm just gonna risk the $500 investment and let it ride down to 0. Or I'm gonna go ahead and try and sell out down to, let's say, $100. Jeff, I've never been in a situation where somebody doesn't buy it. Somebody could just be buying 100 of them at the last second to try to make a 30-cent move on the stock and clear 30 cents at 100 contracts. There's just a number of quant trading firms and hedge funds that just look to pickpocket these kind of things.
And who knows who's buying them. So
no. I mean, I close out positions just because I'm being petty at 5 cents. I'm just so freaking pissed. I don't want it to go to 0, and somebody buys it.
Yeah.
Somebody picks them up.
But at least that in your experience, somebody's going to buy it.
Somebody's always going to buy it.
Yeah.
You're never going to be in a situation where it's like illiquid.
So when you go to sell it, do you have to set that price, your asking price?
Yeah, so you can sell 2 ways. You can set a market order, which generally speaking is always fine. Somebody's always the platform, in this case, Thinkorswim or TD Ameritrade, they're always going to get you the best possible price at that point. But you always run the risk of some jackass out there putting in an order for something way higher or something way lower than where it's currently at, and that market order could fill it. So your best bet is to look where it's currently trading, look where the current bid price is, and set a quote limit order for that bid price.
Okay.
Okay. Like for instance, right now, let's say I bought this at $2. I'm pissed. It's down. It's going down to 99 cents. I'm just going to cut my losses. I got a 50-cent loss. I'm going to put in an order, a limit order to sell for 99 cents. Okay. You can put a limit order in for $1.05 and wait to see the stock fluctuate a little bit and it gets filled, or you can put it in, if you put in a 0.80 cents limit order when the bid is at 0.99, that means you'll take anything above 0.8 and they'll still try to fill you at your best price above 0.8.
Okay.
Okay. You're just not willing to sell for anything less than 0.8. Okay. Makes sense?
Yep.
We can get into a whole nother discussion at some other point on learning actually like, trading, putting stop losses and stuff like that in your trades and trying to pick target prices. Just kind of going over a little bit better understanding what's, what the option chain and premiums are really all about. I feel like the best way to continue to do it, honestly, is just go through examples of previous trades that I've had this week. I've had good winners, bad losers, and small winners. And I feel like just this like little array of 3 different trades does a pretty good job of showing the power of options and the ability to make, 100, 200, 300% returns. Money management is obviously a huge aspect of this as well. It's obviously something I have not mastered. I mentioned this last time. I'm working on it.
Same.
Yeah. Managing your risk and managing your trade is where most day traders in general lose. You see an up day like this and you're like, well, why wouldn't the next day just do the same thing? When you buy stocks, again, you have the luxury of just waiting it out. You think this stock at some point is going to go back up to the high here and I can just ride that out, but I'm paying a pretty penny to do it. And again, my returns on a move like that are 5 to 7%. Great. I mean, if that's what you're comfortable with, great. I strategically am looking for a move in a certain time frame that will pay significant rewards. And if it doesn't, I lose my investment. And that's kind of the rub with options. Now let's go over an example here on Penn National.
I'll be right back.
Okay.
I gotta see if I got ranch for pizza.
Disgusting. All right. So Penn National. Last week, I'm sure a lot of you guys all know what was going on with GameStop and a lot of these big stocks. And Dave Portnoy, kind of was a big player in it. I played the GameStop trade. That's going to be my final example here to kind of go over a big winner and a big loser. But at that point in time, when the whole Robinhood thing was going down, and I knew that Dave Portnoy was like really into this trade, I said to myself,
2 million.
what's that?
2 million.
Yeah. I said to myself, this is a fucking great opportunity for Barstool Fund or DraftKings to delve into the trading game and create an options platform or some sort of stock trading platform on their app. And I thought for sure that, not for sure, but I thought that maybe this will spark such a fire under him because he was so fired up about the whole Robinhood thing that he was pretty much going to be like, we're going to do it. We're going to invest our money and allow an option chain to be traded here.
Mhm.
So I said, you know what? Let me just see. And I knew they had earnings coming up this week. So there's 2 lessons to be taught in this lesson here. Number 1 is this was the 27th. I don't know what day it was. I think it was like Tuesday or Wednesday of last week. Okay. I said, let me go ahead and just take a risk here and think that this stock is going to just make some crazy announcement and shoot up like $20, $30 in the next like week or so. So I went and I looked when the stock was trading around $95 at what $150 strike price was. Now remember, I always figure I don't need the stock to get to 150, right? in the
Just
next
going
2
up helps.
Yeah, but if it continues to go up at a significant rate, these premiums should continue to rise, right? So I could at least make some money on it. But I thought $150 was far enough out that it was cheap. They were $1 a share at a time. Okay, $1, $1 a share. And I bought 10 contracts. I dropped $1,000 for 1,000 shares. Okay. Now, what did the stock do? Next day it went up. Next day it went sideways. Next day it went sideways. Fourth day it shot up, right? I bought it at around 90. It was like $94, $95, like right here. I bought it like the low of the day. I was like really, really pumped about my entry level. It was up, $10 basically from where I bought it. Now 3 days, 4 days later, it's up almost $20 from where I bought it. Okay. Today was earnings, but let's forget that. At this point in time, stock had moved $20. This premium at $150 went from $1 to 40 cents. Okay.
So it dropped.
Clearly, the market makers, whoever's calculating these option prices, did not feel as though this stock was moving in a fast enough time frame to get to $150 in the remaining time. That the likelihood of it getting there was decreasing enough that they basically found the premiums to be worthless. So I lost $600 on this $1,000 bet at this point. Okay. Now, another thing that I didn't look at, and I should have known better, is earnings was coming up on Thursday morning. Okay. When earnings comes up on a stock, there's something called the implied volatility. Okay. Volatility always plays significantly into option pricing. Rapid moves to the upside and rapid moves to the downside. Okay. A pretty stable implied volatility is like 30, 40%. Okay. The implied volatility on this stock yesterday was over 120, 150, which is, 3 times the normal. But you'll see that going into an earnings report. Okay. Everybody's like, oh man, let me play like, for an earnings report, I can get in cheap. I'm expecting like a big move. This will be great. Yeah. Well, who else is pricing in a big move are these market makers who are pricing out these contract levels. Okay. The minute that options report comes out, earning report comes out, that implied volatility collapses. Okay. And that in turn really decreases the ability of your premium to move. Okay. So I had, for what it's worth, Penn did not beat on their earnings report today, but they had good news. And they were still profitable, which ultimately, was seen as a positive for buyers. And this stock jumped up $8 today. Okay. If I had held to the end of today, it would have been worth 68 cents per contract. Yeah, where is it? 68 cents. Actually, my bid was 60. Okay. I sold it at 50 cents. Because I just decided to cut my losses on this. So 2 takeaways. What I should have done is not made a trade because I only had $1,000 that I wanted to spend money on and look far enough out for something that I could afford. Okay. Because had I actually gone to a price much closer, a strike price much closer to, where it's trading at now, I would have made significant money. I can't look back right now. I mean, I can, but I'm not going to. It's going to be time consuming.
I get it.
No, it's not a matter of the pain that I'm gonna be pissed off about. Like I know that there was money to be made there. I know I made the right trade.
How far out would you say is profitable yet safer?
Probably like a 5 to 10% move on a stock, and that all depends on your time frame. Like if I'm buying a contract that's gonna end at the end of this week, I probably wouldn't go any further than 5% of a underlying stock move, which is a big move. But all you need is like a 2% move for that premium to like move. And ideally, if you're doing a weekly one that expires at the end of the week, you need that move to happen like Monday or Tuesday, because if it doesn't happen
Mhm.
by Wednesday, that premium starts to bleed. Now, if I was buying this stock or this option, for January of next year at that strike price, just to get an idea, look at the premium on $150 strike price here. $25 per share.
Mhm.
Okay, so
So
that's,
I guess I like it. Could you explain like, so the premium, is that an extra of that price per contract?
yeah, so that one contract at 100 shares, that's $2,500.
It's closer
Own
to
100 shares.
it's closer to the stock price itself because it's much harder. It's that's so much time.
Well,
Right.
yeah, really what you're paying
know.
for here is your time premium, right? And that's
Right,
really all
so
it
the
is.
closer, the more, or the higher,
The
correct
closer,
or no?
yeah, the closer you get to your, the closer your strike price is to your underlying stock, your premium's always going to be higher.
Yeah.
Okay.
Yeah,
And the further you go out, the premium's going to be lower. The further you move away, I should say, from your strike price.
hmm
But the further time you move out, that premium value is going to rise because you have more time to benefit you, excuse me,
right,
for that stock to move in your direction. Okay. So you're
Right.
paying a premium for that time right there. That's all that's priced in there is a time premium. So yeah, that was a bad management of my options trading there for what should have been a lucrative trade. So just want you guys, to realize that, oh shit, it's so cheap at $150. I can get 1,000 shares worth, and I lost money on it. And all right, so let's go to everybody's favorite stock over the past few weeks, GME.
Where's it at now?
I think it was down to like $50 at the close today.
I know. I think 2 days ago it went from $300 to $90 in that
Yeah.
day.
Yeah, so
Looked beautiful.
that was one of my favorite days.
Sell it, but you can't buy it.
Yeah, you can
Buy
buy
one.
it on that day.
About one.
Crazy, so stupid. I think you can buy more now, but
Of course.
yeah.
Yeah,
more
now
so.
it's down.
All right, so let's do this here. This is the one that gets everybody excited because it got me super fucking excited. This was a huge day in my trading career. It was like one of the biggest gains I ever made on a single trade. And it's a once in a lifetime trade. You'll never make it, but
But you did.
but I did, and then I lost a lot of because pigs get slaughtered, and that's kind of the money management lesson here. Okay, so this was Tuesday of last week. I decided when the stock was around right here. This candle represents a 4-hour time frame. I'm just doing this to kind of show you what was going on. Stock was around $90 intraday. It kind of felt like it was creating a low, and I got crazy and I said, you know what? I'm going to buy $115 strike price. Was when this was at $20. I mean, at $96. The premium was $20 per share. So I bought one contract, cost me $2,000. That stock within the next hour and a half shot up to about $115. Not even. It
What
moved up
strike price did you do when it was at $96?
115.
Okay.
So $25, which was, the day before, this stock was trading in a range of, $100. I was like, this stock can move. This stock could clearly move $20 today. This is getting crazy. Let's get crazy. Let's do it. Spent the $2,000 on it, but I knew that this easily could just go boom, straight down and lose it. But it went up. It went up from like $96 to $105, and that premium went to 40. And I made $2,000 on it, and I sold it. I got so freaking nervous. I was like, just take your money. I made 100%. Boom. And then I said, okay, what I'm gonna do is I'm now gonna roll my profits, which is a strategy in option trading, to a strike price higher with only a percentage of your profits, okay? When what I did was I took my profit, $2,000, and I rolled it into $160 strike price. So now basically I'm playing with house money. If I lost this $2,000, I break even and it's all good, right? Well,
One of the 500.
well, it didn't quite go up to 500 that night, but it did go up to fucking $230. It went up, overnight trading went up to $350, and then it opened at 229. And within the first hour, I sold it for $15,000,
Nice.
$150 premium.
Man, so somebody bought that for 15 grand.
Yeah, because dude, it went up to 20 grand. It went up to 27 grand at one point.
When did it expire, that contract?
This was a weekly. It was going to expire that Friday.
And was it what day was that? Was about midweek? Or was that
This was
200?
Wednesday. It was Wednesday morning. So
Well,
I was, what's that?
So it would have paid out 100 shares at whatever price it was.
It was 100 shares at $150 premium. And I bought it at a $20 premium, and I sold it at 17. So I made $15,000.
How fucking hard were you when you sold that?
Oh, dude, I was beside myself. I was trying to wake up a patient. It was getting crazy.
That's hilarious.
You got a life in your hand, but you're like, ah!
Yeah, I was like, guys, I had to call my attending. I need somebody else to wake up this patient for me. Somebody's gonna get hurt here. So
We all been there, dude. We all been there.
yeah.
Like, if the case is done, they're bringing the stretcher. And you
Yeah. I'm like,
you're like over there on the computer, like.
yeah. They're like, Mike, he's coughing on the tube. Be like, yeah, he's gonna be all right. He's gonna be all right. Don't worry about it. We'll give him a little propofol here. So
Just deal with it. Let it happen.
yeah, just let it happen. So I'm on cloud nine, right? Stock pulled back a little bit more, but nobody knows what's happening here. Is this stock really gonna go to fucking 500 at this point? I'm loving it. So I said, you know what? I'm gonna roll. I'm gonna get crazy. So the options chain, what was really cool was all the way back here on Monday, you couldn't get an option for more than $100. There was no strike price more than $100. Because it never had even close. Like, the market makers don't only make it so far out of the money, and every day they're adding new value. They're adding new strike prices to the options chain. It was just, it was historical. The next day, let's go to the 15-minute chart on that day if we can here. Yeah, let's do it right here. Okay. So I watched the stock go up to $515 overnight. I'm not in no position. And then before the close, it starts crashing down and it opens up, right? I'm like, all right, here's what I'm going to do. The highest strike price they had was 570. But I knew that if I had a volatile move, this thing will move, right? So I wait till it opens. This is a 15-minute bar. It went up to like $350 here. And I go, all right, let me see what this value is, this 570 strike, in case we go up to 500 here. I'm going to do it. I wait a little bit more. And finally at 400, I pull the trigger on it. And it was a $9,000. It was $90 premium. Okay. So it's a $9,000 for me to own 100 shares of the stock. If I lose it all, I'm still up $6 grand, but fuck that. We're not losing it. This is going to the moon, right? I buy it. It goes from 90, it goes up to 150. I had like a $6,000 profit on there already. Like, that's great. I'm like, I made 70% pretty much already on this stock. Okay. Any average hedge fund manager, trader, blah, 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 trying to make 15, 20% a year, and they're happy with it. We're making money. Like, this is the craziness of options. I'm moving 70, 50, 100% in minutes, right? Right around this time, Robinhood announces, boom, we are not allowing trading and buying of this stock anymore. We went from 473 in a matter of an hour down to $130. Money's gone. Gone. I sold it here at 20 and I lost I sold it at 30. I lost $6,000 on the trade.
So could you have sold it when it was at 150 if you wanted to?
Yeah, I could have sold it any way down here, but I'm
Fuck
like,
that though.
yeah, I'm
Cool
like,
to move.
nah, because this is a volatile stock, you got people pumping and dumping. I'm like, whatever, they'll find some support here, find some support. And then right around here, I just basically shit my pants and I was like, all right, I'm out.
No support's happening.
Yeah, no support's happening. So listen, high risk, high reward. This is a once in a lifetime opportunity. It was cool to do that, but it was amazing to be a part of watching the options chain move in dramatic fashion. I mean,
So how
Yeah.
often were you like checking your computer, seeing what was going
oh,
on?
dude, first of all, I'm doing this from my phone at work.
That's what I was thinking because you said you were at work. It's like, were you just on it?
Yeah, no, dude, I don't trade from my computer, which is crazy. My brother and I have a joint account together where he's in front of a computer most of the day. And we do this together pretty much, but he wasn't in the GME in the GameStop. This was me alone. I was doing it with my Roth IRA money. Nice. my time didn't tell my wife. I told my wife about the $15,000. I didn't tell her about the $6,000 loss the next day, but
I get it. Scared money don't make money.
that's right, baby.
Cool.
Um,
Hey, Mike, I got to take off. I'm actually having another call.
okay, no problem.
Are you recording this?
Yes.
Okay. Okay, cool. I want
All right,
to
man.
This is interesting. All
All
right.
right, cool. You got it. Take care.
Thanks.
All right. So yeah, listen, those were like three good examples of, I think good examples of kind of what can happen here. Let's see. Who do we got here? We still just got the three of us, Ryan, Cole, and Nicholas.
Yeah.
Nicholas.
Oh, Nicole.
So my biggest question is, so you know how every year the stock or market is like apparently raised 10%?
Yeah. you got it.
What happens in 20, 30 years when a simple $5 share that used to be $5 is now $300, $350 share? And people can't get into it because the prices are so high. You know what I'm saying?
No, I'm not following. Say it again. I'm sorry.
Yeah.
Nah, it's not important at all, actually.
No. Say the question again.
So you know how the stock market's raised 10% every year?
Yeah.
What happens in 20, 30 years when everything's just so high that you can't get into it unless you got $75,000 sitting around?
All right. Well, here, you want to talk about a stock that's too expensive?
Yeah, no shit. Shit's out of
Amazon.
control.
Okay. You want to see something here? So Amazon is trading sideways here now at around, let's say, the $3,300 price mark for a long time. You want to own 100 shares of Amazon next week?
I bet
No.
Here's what it's going to cost you. So at 3,331 today, okay? Let's see, by next week, you think this stock, a 1% move is $30. So a 3% move on this stock gets you to over 3,400 next week. So for
what, 23,000?
no, 2,300,
Oh shit, my bad.
2,400.
And so I guess that's why options could be better because you're not actually buying a whole ass share.
Yeah, I don't need to pay, whatever the freaking, $33,000, 100 shares. Geez, I mean it's a lot of money. It's $33,000. It's $330,000.
I told my dad when the stock market just went to shit when COVID hit, I told my dad, I was like, yo, should I pull my retirement out? Should I just drain my 401k and just go on the stock market?
Whenever COVID hit, wait, can you actually hear me? I don't see
Yeah.
my input. Oh,
Yeah.
okay. Whenever COVID hit, I don't remember the month exactly, but I had cattle contracts and I lost like 18 grand.
Oh,
And then I bought more going on the way up.
Buy the
than what I
dip.
had the previous, and then I ended up back at 0 and some. And that was probably like the best thing that I've ever done as far as that.
Best feeling ever.
Yeah, yeah, to not lose 18 grand.
Yeah. I mean, that's the crazy thing about a lot of this trading too. It's very emotional. It's without a doubt some form of gambling, whether we like to admit it or not, that
Yeah.
I'm doing,
Yeah.
I'm strategically placing these bets, blah, blah, blah. I mean, you're gambling. You're gambling that this thing's gonna go up and you get the same high from, making a ton
That's
of
my
money.
whole job, unfortunately.
Yeah, it's a real thing. So to remove that from your trading is arguably the most important thing about it. It's something I've struggled with for a long time. I've been trading for a long time, and I can't quit my day job because I have not made enough money doing it. Because you give it all back. You make money and you get loose. You make a little bit more. You bet more on the next one instead of coming up with a system that brings you consistent profits that when you compound it over time, in 10 years, if you stuck to your plan,
Being disciplined.
yeah, you could be done. You could be done in 10 years. You
I was
really
gonna say,
could.
is this something you want to do, like full time, and then
No, I mean, I like what I do right now. Obviously, I love my job. So no, I still want to do that. But yeah, I mean, I want to get to a point where I'm making, a certain percentage of return. Like, so Tim put together a nice Excel spreadsheet that if you start with 2 grand and you grow 7% a week, just your account, it ends up being like $180,000 at the end of the year.
not bad?
Damn.
Yeah, and that's small. I mean, to turn 7% of $2,000 is what, $140 the first week.
That's assuming you never lose, though.
Yeah, but I mean, how hard is it to make $140 in the first week with $2,000 when you're trading options?
Not hard at all.
True.
So the key is that, so I talked about it a little bit in the last one, and what Tim and I do is we're in this group now where we've learned a lot really about not how to trade options, but how to manage your trade, which is arguably even more important. Once you learn how to do this is the easy part. You learn how it works, you learn what your price points are, you enter the trade, and now managing your trade is where you make your money. Okay, because if you can buy, for instance, on a cheaper option, let's just use this one. Let's go crazy here. Okay, I got a lot of money, and I'm gonna drop 20 grand on an Amazon trade. Okay, I'm gonna buy 10 contracts at $23 a share. That's 1,000 shares. That's $23,080 or $800. Okay. And I think that this stock is going to go from here on this chart. You guys can see the chart to here, right? The previous high last week was 34.28. So move up to 3,400 by the end of next week. Now, this is a daily candle right here, right? It went from 34 and change to almost 3,300, It's doable, right? Maybe a little move up here tomorrow, maybe another little move up on Monday. That's an easy move according to the chart is what I'm thinking here. This
Is my
what we're
dad
like
trying
for.
to? Is my dad trying to
Click
join the
open
thing?
Hold on, let me see.
launch meeting.
Is it saying like you have to get accepted or something?
It says click open Zoom meeting on the dialog shown by the browser. If you do not see the dialog,
Where are
please
you, man?
watch the video below.
I don't know. My dad's old man. I know.
I don't even see you popping in on the participants here on the side,
He said he's typed in everything.
but I hear you.
Don't have Zoom client installed? Do I have to install CleanGiant?
I don't
Yeah,
know.
yeah. I did. You did it like asking you to install the app or something?
Yeah, I guess you, or either that or go to the website. Are you on the website?
Yeah, I went on the website. I signed in, so I created an account.
Okay.
And I got to where it says click open meeting. So I click on launch meeting. And below there says, do you have Zoom client installed? Download now. Do I got to install that?
Yeah, maybe.
Yeah, I would download it. It takes like 20 seconds.
Yeah.
Click and receive notification, then click Zoom.
So just to reiterate some of this trade management here, the stock's at 33.26 or 33.31. Okay.
We can't see your screen, I don't
Yeah,
think.
share your screen.
Oh, sorry.
I'm still starting to log on here.
Oh, okay, Dad.
Hold on 1 second. Okay. So this is kind of just to go over trade management here. So I bought 10 contracts. I spent $23,000 on it. Stock moves to,
Put a enter meeting code.
yeah, do you have the meeting ID or the password?
Yeah, he's got both of them.
That's asking me to put a meeting code in.
Yeah, that's the options.
Options.
Put options in.
Options.
OPTIONS, in case you're wondering.
Good one.
Yo, what's happening?
Are you in it?
Let's see where you
I
are.
can see myself.
Can you
Best join with audio.
Can you see anybody else?
All right, he's in.
He's in. All
Join.
right.
Oh,
Old ass some bitch.
At the bottom, you got to click start video. Glad we're recording this for you.
this
Ryan, is that your apartment over there? Your apartment?
is my dorm, dude. It's about
How's your-
10
how's-
feet long by 5 feet wide.
Wait,
Hey,
you got
what's that?
you got a solo?
Now my roommate's just not here.
Yeah, I
What's
just
that
clicked something to start video. Click yes.
What's that chick's name again? Ryan.
Tanya?
Sally. Is it Sally?
Is it just us four?
Yeah. oh,
Yeah. Yeah, man. We still got the Christmas tree up.
yeah.
What's happening?
Awesome.
So Mike, since it's just us four,
Yeah.
I was asking them, all the stuff you say to go find, what the option price is and this, that, where do I find that on Ameritrade?
All right. So you have a TD Ameritrade account?
Yeah,
Okay. You need to download the app Thinkorswim. This is the platform that I use right here.
That's what I said.
on my computer, on my laptop here, right?
Yep. Yep.
God damn it, got to download fucking everything.
You got to download everything, man. You can download the app on your phone too.
Yeah. I just typed in Thinkorswim and like it says TD Ameritrade at the top and it says download app or log in, whichever.
Yeah. And you use your same login information that from your TD Ameritrade account and it should just link right up.
Okay. So once you're in there, how do you get to see all this shit? Where is this? Is this
Okay.
what comes up?
This is what comes up right here. It's going to look like this.
Okay.
Is that everything you're in or is that your watch list on the left, I
No,
guess?
this is this is a play account. This is like not even my watch list.
So if I want to go look at a price of something, what do you got?
Okay, so what you do is you go over here to analyze, this tab
Okay.
analyze,
Yeah.
and this is what it's going to look like. Okay, I'm going to type in the stock name here.
Oh, okay. Yeah, you put the stock name.
What are we interested in, man?
Royal Caribbean, man.
All right, what's
RCL.
RCL.
I said that was a good stock from the start.
Excuse me?
I said that was a good stock from the start.
Yeah, I think I bought it way before you did, man.
Just saying.
All right, so then you go right here. Okay, you type in RCL and then you click on this tab here called the option chain.
Right.
Okay, and then it's going to list all the weeks and the months of of your expiration.
That's your expiration dates right
These are
there.
your expiration dates.
February 5th, February 12th, 26th. So let's just say I want to do February 26th.
Okay, 4 weeks from now, basically, 4 Fridays from now.
Right,
I click on it.
right.
Now,
Then
right
I got-
here,
then I
right
go
here,
to-
you can go to strikes and you can change the amount of strikes you want to see. This will like do 14 means they'll do 7 below where the stock is at and 7 above. Or you can just do all.
All right.
It just depends. 14 is probably enough. You're probably not trying to get too crazy out of the money. Or maybe you are.
No, put all for a second.
Okay.
So let's say I think in 4 weeks. So we looking at the purple or the black?
Purple just delineates, so the left side are the call options, the right side
Right.
are the put options. Okay, call are the prices that the stock's gonna go up. These are the prices that the stocks are gonna go down.
All right, so I think, so right now, I think in 4 weeks, the price is gonna be $80.
Okay, so let's scroll down to the $80 strike price here.
So
Okay,
this is your strike prices,
Fuck.
right here in the middle are your strike prices.
right, okay,
So I'm here at 80, and I go over to the left side here to look at my calls. See right here, it says calls. And right here it
Right.
says puts. Do you
Right.
see yourself on my screen or no? You don't see yourself, right? Where,
yeah, I see myself oh, I see. No, I don't see you.
okay.
Yeah, I do see you.
You see my picture of you on the bottom left-hand side of my screen or no?
No, I see you on my right side on the screen.
Okay, all right. So right here it says puts, right here it says calls. We're interested in
Right.
calls because we think the stock's gonna go up, okay?
Right,
So I'm at $80 here. I go over to, I have an ask column and I have a bid column, just like you have in a stock, right?
so can you see my mouse? You can't see my mouse moving, can you?
No, I can't, I
Okay.
only can see you.
So on the $80 call, you go straight across here, right? So you got
Straight across here.
62, 80, 24, 138, 155. Okay,
Yeah, so these columns right here, these are adjustable. This is, let's go to the default one, what you'll see here. This is what you're gonna see. Okay. What I like to do here, if you look next to the option chain, this layout tab right here,
right,
okay, I had a volume and open interest.
right.
Okay, that tells me what the current volume, how many people have bought that strike price.
Oh, okay.
Okay, and it also tells me the open interest means how many people have this position open. Okay. But what
So
it
a lot of people like my strike price. at
Yeah,
$80,
all right,
don't
there's
they?
a caveat to that, okay? Because you can also sell this premium instead of buying the premium, like you sell a short. Okay, so it does, and you can do the same thing when you sell a premium, for instance. Let's say I wanted to buy one contract. Let's say you wanted to buy a call here, right? One contract is times 100, it's gonna cost you $155 for 100 shares, okay?
Right,
If I wanted to sell this, like I'm gonna short it, you sell this and they give you $138 and you hope
Right.
that the stock goes down so you can sell it back for $2.
at $201.
$200,
Okay,
right? Okay. So this open interest doesn't tell you that they're only people that are buying the calls. They could be selling the calls. And believe it or
Okay,
not,
okay,
a lot of
okay.
hedge funds and a lot of these, sophisticated financial institutions do that.
right,
Okay.
right.
But in general, if there's a lot of volume and a lot of open interest, there's yeah, it's exciting, right? There's obviously people interested in it. There's definitely more at this level than there are at 78. Like there's 1 in 3. So that's something to think about when you go to sell it. You only got one Mama Luke who's got it over here, so
Oh, so if the price gets to 78 at one point before my 4 weeks, I go to sell it, I gotta have someone to
no.
buy it.
Well, yeah, you always got every time you want to sell your premium, you got to have a buyer.
Oh, and
Okay.
what have a buyer?
What's that?
What happens if you don't have a buyer?
Then you wait. You put in the order and you wait till it gets filled.
Okay. And
Uh,
if 4
the
weeks
pre-
comes along and the price doesn't hit 80, I'm shocked. But obviously, no one's gonna buy if it stays under. But if it goes over 80, someone's gonna
All
buy
right.
it. Then I
So no. So So all you really want to do is hope that this stock, let's look at the chart, okay? There becomes this misconception that it has to get to 80, you know, by
Right.
that point. You're just you have an idea that you think it's going to get to that over the next course of the week, and the faster that it moves to that $80 price point, the more
Right.
that premium's going to increase.
Okay.
Okay. So let's say it's trading at, it closed today at 70.84. Tomorrow, maybe we get above, today's high of 71 or 72. We got some resistance. You got the moving averages of like $74. Okay.
Right.
If this thing can move in the next few days up to $74, there's probably a better likelihood that it's going to get to 80 in the next couple of weeks, right? So
Right.
that premium's just going to start moving. It's priced at 1.55 right now. It could move to, a $3 move. $3, into the money from where you're at right now is 255. It's not an exact calculation, but it could move $1.
So let's say I buy it at $155 right now. And then in 4 days, the premium goes up to $2 and I sell for $200. That means I made the $45.
You made $45 on 150. I mean, you made 30%.
Right. Okay. All right.
You spend $1,000, you spend $1,500, you buy 10 contracts.
Make $450. Right.
Yeah.
But if it doesn't go to that $80, you lose. I lost that $155.
Yeah. So, I mean, if it starts to trade sideways, this thing is kind of, traded sideways here at 74 and never really
Right.
kind of made a move back to the upside, and it kind of lost itself down, but it found some support here at 64. Moving back up, it's getting back to this range here that traded sideways. So you're really hoping that you kind of bust through this level here.
Well, that's why I'm thinking it's going to shoot back up eventually.
Yeah,
It came
so-
down a lot. It's starting to work its way back up.
So maybe, and what was this, in mid November, December, it got up to like 85.
Right.
Looking at the chart, maybe your best bet is to kind of wait and see if it gets through this level again. And if it does, you go and you purchase like an 85 contract, a few
I
weeks
was
out.
talking to your dad. I was talking to your dad today. What I'm banking on is all these shots coming out. Everyone's getting shots.
Yep.
Everyone's going to start saying, "Oh, we're feeling good." Cruise line's going to start saying, "All right, man, we're going to start cruising."
So why don't you buy yourself some time?
Well, I was thinking about that too. Going out to.
So I'll go back to the
Actually,
option
I was actually thinking around June or something like that.
Yeah, give yourself some time, right? You got the news of the stuff coming out. Now, how fast is everybody gonna get implemented and get vaccinated? And then once they
Right.
are, is everybody, like what you really should do is play it super safe and go to January.
So
January.
For people to get away during the winter.
Yeah, I got it's $400 then.
For 100 shares, correct.
Right, to go to $80.
Correct. But it could go to $80 in 2 weeks and you're making a ton of money, but you're buying yourself some time. If this thing goes down to 65, that $14 premium will probably only go down to maybe 12.
Right, I still have time. All right, so let's say come that January date, the stock the highest got is $79. All right.
Mm-hmm.
I have to try to sell. I want to try to get it, unload this shit.
Mm-hmm.
All right. No one wants to buy it. Do I have to now buy those 100 shares at the $70?
You'll always have a seller, Santa.
Okay.
I mean, look, there's actually more volume and open interest on these $80 calls than there are on the February weeklies.
Right.
Way more.
Right.
People are hoping the same thing, that these things have been beaten down a bit. I mean, and there's always going to be a buyer. There's always going to be a seller. the only people who are worried about stuff like this are institutional people buying, 300-400 contracts of, by multi-million dollar purchases that they're not gonna be able to liquidate some of their stuff, You're trying to get rid of 2, 3, 4 contracts, maybe, something like that, even
I-
one.
But just let's say, you're saying,
Just one.
God forbid there isn't a buyer. What happens? I gotta buy 100
I
shares.
can't, I can't even, it's not even an option. There's always gonna be a buyer. It's.
Everyone dies and I'm the only one left. I
Everybody
gotta buy the 100.
dies.
I gotta buy the 100
No,
shares. and whatever-
listen, if everybody dies and you don't get to $80, you lose your money.
Just 100,
You
Just
lose your,
the-
the 14,
the
85.
1400.
Yeah.
So I don't have to go in and buy the 100 shares at that point at the call. I just say,
Only-
forget it, I bought-
Only if it's above your strike price.
So say it's above and there's no one to
well,
buy
if it goes
it.
to $90 and I can't get anyone to buy it, then I gotta buy the
No
100
wonder.
I
shares.
mean, that's impossible.
I
It's-
know
it's-
you're saying it would never happen, but I'm just,
All
I'm
right, in
looking-
theory, you're the only person left in the world, and there's two people. There's the guy who's enforcing the purchases on the stock market, and there's you. Yes, you're subjected to then front the $80,000 or the $8,000
and then I gotta buy at the $90 price or the $80 price.
at the strike price, the $80.
But it's worth 90, then I could turn around and sell it and still make money then.
Exactly.
I
Exactly.
just gotta have the 80 grand up front somehow.
Yeah, you'll make 10,000 minus the 1,500 that you spend on your premium.
Right. Okay. And then if the only
But
way to
then
cover
you're really
that,
screwed because there's nobody to buy at 90 for you either, because there's nobody else on the planet. You're gonna be the lone guy on the cruise line, man. You're gonna be the captain.
I got you.
Captain.
I always like to look at every scenario, I
Fair
understand,
enough.
I know there's no chance, it's probably, it's a
Yeah.
99.9999999 infinity chance, but I just like to know the
Yeah.
scenarios,
Fair enough.
All right. Now,
Um, go ahead.
Do I have to have a certain account in Ameritrade in order to let me, because
Yeah.
I know,
so
like, when I look at my account, I have what's called, there's like this margin account on the left side where I got, it says margin account.
Yep. All right. So the margin account is pretty much designed for you to trade stocks, trade, and it allows you to basically to make a trade and not wait for that quote unquote trade to settle in your account. It takes like 2 to 3 days for the cash.
You
to
get the money
settle.
right away.
Yeah, they put it right away.
Okay.
What you want to do is set up if you plan on ever closing a trade on the same day multiple times, they're going to flag you for day trading, unless you have more
You're
than
talking about like
25
an option trade or just
Yeah.
any trade?
any trade. But
Yeah,
make
no,
sure
I
you
know.
have-
If you start trying to go in and out every day,
right.
they're gonna flag.
Unless you have 25,000 or more in the account, then they don't care. It's okay. But
In
you-
cash or just the whole count is worth that much?
the account is worth that much.
Oh, okay, all right, well, that's fine. All right.
But you do need to be designated for options trading. It's basically you gotta fill out some form that says I want to make my account able to trade options, and they're gonna ask you some questions like what's your experience, what's your blah 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 blah, and all that kind of stuff. And you just say, listen, I'm a
Experience is don't
experience,
give my
man.
money to my
I've been-
nephew, man.
I've
He
been
loses it
donating
on it.
I've been donating
So-
money for 30 years.
So they didn't ask me any of that. I just like went into Thinkorswim and typed in my password and logged me in.
And can you
Yeah, but
purchase
we'll
an
let
option?
you trade anything.
What?
Yeah, but it
we'll
won't
let
let
you
you
trade.
trade options.
Why not?
I'm
You have to
telling
have an
you.
account.
You
I'm
need-
literally in Thinkorswim right now.
Yeah, but that's not the point. You can be
Well,
in
you can look at it.
Thinkorswim.
What's up, Cole?
Hey.
Yo, they tell you it's $50 for this lesson?
Not yet, man. That's at the end.
Actually, question though, if, or do you have to,
Can you just subscribe to my link down here at the bottom of the page? Go ahead.
do you have to pay like a subscription for faster updates? Is that a thing on this?
No.
No, it's like live or?
Yeah, it's all live.
I can literally confirm and send this order right now. and I'm in it on the live money thing.
What are you buying?
Go ahead.
Nothing. I'm just proving a point.
No, go ahead and confirm and send.
Try
'Cause
it,
First of
click
all,
it.
they won't get executed until 9:30 tomorrow and you can cancel it, but go ahead and confirm and send an options trade right now. Oh. I heard you can't.
No, I don't know if available money. That's all it
Cause you
did.
don't have an account with money in it.
So anyhow, you do need to have an options account set up, I'm telling you. And again, all that is just going on your TD Ameritrade account on your desktop and just applying for like an options account that'll just basically upgrade your account. They just ask a couple simple questions and that's it.
This connects to Ameritrade?
Yeah.
Okay.
Yep. This is TD Ameritrade's trading platform.
Oh, okay.
Sink or swim, alright.
So I don't
Yeah.
need like the Ameritrade app also. I can just do it from this or no?
Correct.
Okay.
So let me ask you another thing, Mike. Option prices,
Hmm.
that's based on the current stock price, correct?
Correct.
So let's say Royal Caribbean is hammered tomorrow and, drops $6.
Yep.
That January option tomorrow is gonna be cheaper than it was today.
For sure. Actually,
Okay.
that was a January 2023. We were looking at, oh, no, it
Oof.
was 2022. No, we were looking at the right one. Yeah, so, it could,
Strike price of 80s, yeah.
the
So
same
if it gets
way,
hammered tomorrow, that strike price will go down then.
yeah.
I'm
and it
sorry,
won't-
the
the
price.
premium.
And you're always doing the ask price, you're paying the bid price. The ask
Yep.
price is what you're paying,
The
right?
ask price, what you're paying, and the bid price, what you're selling at.
Right.
And for the same reason that your premium won't go up as drastically with the move up, the same reason it won't go down as drastically with the move down when you're
Right.
that far out, right? Because you got time.
Right.
Now I see the options thing you do.
Yeah.
I just lied and said I'm gonna be aggressive on everything.
Yeah, but the sooner you get in the money, meaning the underlying price of the stock gets above $80, your premium is going to start to move pretty damn close to $1.
Dollar for dollar. I think you
Dollar
said
for
that,
dollar.
yeah.
Yep.
So if it gets to $100 by January, you're laughing then, huh?
I mean, at that point, you're guaranteed basically, $20,000 at that point, or $2,000, I should
right.
say, depending on how
Right,
many.
because it went up $20 from your strike point, so right. All right. See how much money I can lose on this option trading.
Yeah, man. Listen, man. There's
That's what I'm thinking at first.
It kind of does sound, I guess, like more like involved.
It's more advanced than just normal trading, I think.
But I'm saying like, like stocks, like you kind of just buy them and sit on them for a while usually, right?
I mean, but you can do the same thing really with an options.
Yeah,
If you just go ahead and you buy a January option, but you can't sit there and be like, up, stock went up $3 today. I had 100 shares. I made $300. Like you're going to go the premium and you'd be like, oh, I had a January option. The stock went up $3, but the premium only went up like 75 cents because, it's so far out. So it didn't move.
mhm.
So yeah, you do need to be a little bit more on top of it. You still set like alerts for price values on the stock. Be like, all right, my goal here anyway is to get this stock back up to its recent high, let's say of $85 come next January. So you set some alerts on the way up and you see, where the premium has moved according to that stock price move. If you start trading weeklies, looking for like a $2, $3 move in that stock over the next week, you do need to be on top of it because
Mhm.
it fluctuates so much so fast. So yeah, it's a lot more time consuming. If you don't have the time, it's better to just go ahead and buy a couple months out and
Right.
set some alerts and go ahead.
So basically, if you want to turn it over in a week or so, you need to really watch, see what the hell's going on.
Yeah,
Long term, you can just sit back a little and not have to look at it every minute.
exactly. Yep.
Q.
All right.
Another meeting next Monday.
Yo, man, you check out DraftKings lately?
I have DraftKings, man.
In options or regular stock?
options. I had a weekly for next week that Timmy and I sold today. And I have a May $60 strike price.
Oof, I think you're already there, aren't you?
Yeah, I'm in the money right now on that one.
Yeah, I know DraftKings doing good.
DraftKings is good. So
Sarah, what's the other one?
Penn.
Well, yeah, Penn's not doing that good.
Yeah, Penn's at all-time highs today, man.
Yeah, but I mean, still, shit. Oh, fuck, it went up $9 today. I didn't realize that.
Yep.
God damn. Corsair Gaming's another one that's doing well.
Yeah, what's that one again?
Let's go.
CRSR.
Yep. Isn't Bets a so Bets is a ETF on gambling too. That's a decent one to check out.
What was it?
BETZ. BETZ.
EETZ. ETZ. Yo, what's with this Dogecoin shit, man?
I mean, it's just
Well, what was it on the exchange or where's it?
no,
at?
it's a cryptocurrency.
Oh, Dogecoin? It's up like
Dogecoin.
21,000%.
Dogecoin or Dogcoin or whatever the hell it is.
Doji. Who the hell knows?
DOGE. So how do you buy
Doge.
something like that?
I
It's
think
complicated.
it's only in Robinhood. I can't find it on a.
There's another platform to get it, man. Just save your money. Don't worry
Yeah,
about
no,
that.
I know, man.
Yeah, I put like
I'll lose it somewhere else.
$130 into it.
Yeah, start making some money doing options. You make more
I
money
also
that way.
like freaking Target's killing me, man. I mean, I've been waiting
I
for
love
that to drop.
Target.
And that's fucking going up also, man. I think
Love
that's another
Target.
I think that's another long term, you know?
I mean, yeah, Target, listen, Target's found some good support here. I'm looking at the chart right now. It held this 50-day moving average of 180 and now jumped back up today. I mean,
Yeah, no, I know. I like Target. That one,
I think a $200 strike a few months out is a no-brainer.
yeah. I actually bought some of that in Nono's account, Target.
Stop making no all this money.
I'm making Nono all this money, man. I'm telling you, he's killing me. Actually, the last 2-3 days, my account is shitted the money, man.
Good. So a target strike price of $200 in March is $450 for every 100 shares.
That's not too bad. January, February, that gives you a month to get there. Means we gotta go 5%.
Gives you almost 2
Thanks.
months to get there. It's the third Friday of every month.
Oh, it's a third Friday of the month. Okay. That only has to jump 5%, man, to get to 200.
I
Not,
mean,
yeah, about 6-7%.
I mean, yeah, you're looking at, that thing goes to 100. You're looking at, that thing goes to 200. You're easily making 100% return.
Right. Yeah, man, we should go heavy on TMDI, man, a year out from now. See what happens.
I'm heavy on it, man. I got 1,000 shares. Things looking good.
I got 1,000 just in the regular market on that one.
I don't think it has options. Let me see.
Oh, it doesn't have an option?
No, it doesn't have options. But it's breaking back out, man. We're going back to $3.50. No problem here.
There you go. I'm waiting for it to hit 20 or something like that.
Oh yeah, we're definitely waiting for 20.
You check out medical marijuana, man, it's coming back, baby. That's gonna bust through one of these days.
What was the thing again? MJMA?
Yeah.
Dude, Dad, you're welcome for telling you about Corsair.
Oh yeah.
Yeah,
look
you
at
know
that.
what to tell me about Corsair.
I know I am.
Is that-
Medical
oh, I
marijuana,
I thought
man.
that was vodka, Ryan. I was like, holy shit.
Just
No, I get half of Dad's cut from Corsair.
10 years, medical marijuana is gonna be worth $50 a share, and it's gonna hit the market,
I
man.
can't
and
believe
I'm
you're still
back.
holding that. You held that all the way from back then?
What? Yeah, man. I still got 5,000 shares of it. I'm waiting for it to go.